A very good afternoon to everyone. And thank you so much for taking out time on a Saturday afternoon. And I'm going to ensure that this 1 hour which you spend with me is very productive and you take something very meaningful. Of course, I've prepared a small presentation on Bitcoin and crypto, which I'll take you through. So I've been into the wealth management profession for the last 2 decades. And what I've realized is that the wealth management as a segment continues to grow at a very high pace. And one of the big reasons for this is that markets have become very dynamic, markets have become very volatile, and they're highly globally integrated. Now, investors come to wealth manager or a financial advisor for many reasons. Of course, one of the primary reason is return. Investors want higher return. It's not that they are greedy. It's also because they want to protect against the inflation and they want to protect the purchasing power of the money. So they want higher return from the portfolio. They come to us for the opportunity and for better return. So definitely, I think that is a trend, and it is important. That's why we learn about new trends that from where investors can get higher return, and that's where the Bitcoin and crypto comes in. Second reason why investors come to a wealth manager is, of course, risk management. Wealth gets eroded. There are a lot of scams. There are a lot of investments which become zero, or where investors don't make return. Every time we keep hearing about scams, disruptions. So they want the wealth to be protected. They don't want to take any risk where erosion of wealth happens. So that is something which is very important. And then what I've realized over a period of time is that it's not about return and risk. It's also about lifestyle, goal, retirement planning, passive income. See, everyone works and they want some kind of passive income when they require. They need financial independence. They want protection from any kind of uncertainty. And that's where the financial planning comes. So as a wealth manager, we do it for our clients. And last, what I feel is, which is very important, is succession of wealth or transfer of wealth to next generation. Generally, most of the time we focus on wealth creation, but as we get old, as we become old, what becomes important is transfer of wealth to next generation. So smooth planning is very important. And what we realize is generally wealth gets eroded in 3 or 4 generations. So ensuring that wealth lasts for decades is something very important. So I think wealth management is going to stay here, and it's only going to help investors have a smooth and better financial life. So that was about wealth management. And we'll start with the Bitcoin and crypto. So, some very interesting fact. In India, there are around 6 to 7 mutual fund crore investors. You'll be surprised to know that now in India, we have almost 4.5 crores crypto investors. So what mutual funds have been trying to do since 1964 in the last 60 years, crypto industry has just done it in 5 to 10 years. So participation continues to go up. So I'm going to give you good knowledge about Bitcoin today. And what I have tried to do is try to give enough information which will help you in making decisions. So we're going to uncover the Bitcoin and crypto. And before I take you through the presentation, it's very important that, most of the time people come to the Bitcoin or crypto just to make return. They just think that it's a trading asset and they can make quick money. And if you have that in mind, let me tell you that it's not going to work for you. And just for the benefit of everyone, let me also tell you 99% of the investors don't make money in crypto. That's a fact. And maybe there are 1% of the people who make, and maybe they do something right, and maybe they make, a lot of money. But the fact is, most of the people, they don't make money. The reason is they come just for trading. So it's very important to understand the fundamentals, that why Bitcoin is here to stay and why it goes up. So before I take you through the presentation, important disclaimer. Crypto is a personal passion. I'm doing this in the capacity of Mukesh Jindal. The purpose of this presentation is to spread crypto education purely. This is not an investment advisory at all. I don't recommend investing in crypto or Bitcoin. Please do your due diligence before investing. Alpha Capital has no connection with crypto. I work with Alpha Capital, but Alpha Capital doesn't recommend. This is purely a personal passion. And last 99% of the investors don't make money in crypto. But my endeavor, my effort is that this percentage changes. I want more and more investors to make money out of crypto. So it's very important that we understand the history of money. And because till the time you don't understand the history of money, you won't understand that why Bitcoin is so important. So if you remember many thousands years back, when humans started the barter system, the exchange of currency which was prevalent at that time was she cells and various other precious metals. That was the first beginning. And then we had precious metals like gold, silver, bronze, which got started used by various countries and various people. And then we had bank notes, which were gold backed. Till 1970, the dollar which used to come in the market was gold backed. It was only after Bretton Woods in 1970 that the gold backed gold backing of a currency. For example, if you're buying $1 till 1970, each dollar was backed by gold asset. You could exchange that dollar against the gold. After 1970, it was removed. That's when the currency became digital. And that's where you have all the digital money, and that's where you have all the currencies. And now you have Bitcoin, where things are moving. Now, this is a journey. A lot of time people are not able to visualize a change in mode of business, change in mode of currency, change in mode of investments, because we have very limited history. Our knowledge is very limited. But when you read history books, when you read about history of money, then you will realize that there has always been a constant change. So you may not be able to think Bitcoin that it can become, future currency, but there's a very high possibility or a chance that transition happens. And whenever there has been a transition, there's always been a problem in an existing system. When there's a problem, that's where something new comes up. So let's look at more history, that how the problem came and when it has happened. Chart shows disruption of empires. Historically, there have been many empires. Most of us know that the US today is the dominating country, and US dollar is the reserve currency right now. But this only started from 1920. And before that, we also know that the UK, the British Empire, was the greatest. And that's where the British Kingdom, was ruling India. It was ruling over most of the world. And US was not there. Before US, there was France. Before France, there was Netherlands. Before Netherlands, there was Spain. Now, one thing is clear, is that the empires, they keep changing, right? In the sense that there's a trend of 100 years, 110 years, generally when a country is dominating a world. And then there's a change. There's a reason for change. So, for example, the British Empire started losing relevance after 1920 because it got into a lot of wars. It got into many, areas in many countries that it captured, and a lot of them became unproductive. The UK at that point of time started printing a lot of money. They had taken a lot of debt, and that's where the UK lost its dominant position. So we can see that there's always a change in trend. Similarly, that's what is happening in US. US, over a period of time, they have been printing money like anything. And currently they have an annual deficit of $1.8 trillion. And they have been, participating in wars which have not given them anything. So, for example, the Ukraine war or Iraq war, Afghanistan war, they keep doing these things. And that's one of the reasons why Trump is also trying to make changes, why he's trying to reduce the deficit. Whether he's able to do it or not, that's a different reason. But that's when, these are the symptoms when any country loses the dominant position. So the trend is changing. I don't know which country will come. Maybe there's a China, maybe there's some other country, or maybe a Bitcoin. We don't know. But this is something which is going to play out. Now, this is an important chart. So you can look at how dollar has been getting printed over the last many years. And the dollar printing can also be visualized through USM2 money supply. That this is a data which is available, and that how much money the US government has been printing and increasing the money supply, and this has been inflating like anything. And of course, the printing has gone up sharply after the COVID, and now it stands at $21 trillion. And you'll be surprised to know that the annual growth rate of dollar printing or money supply increase is 11.8% in US. And it has many problems. See, when a country starts printing money, asset loses its value, or the money which you hold loses its purchasing power. And that's where the inflation comes. So that's the reason why we have such a high inflation, because countries have been printing money. And it's not just because, the US has been printing money. This is a chart of, money supply since 2019 across major economies. So India is one of the leader. China, US, Europe, everyone, they print money. They print money because they spend a lot. They make promises to people. They give money. And India, you'll be surprised to know that the annual budget which government comes out, the spending which we do funding of that spending, 50% of that, almost 50% of that comes from borrowing. If we don't borrow, then we will not be able to do the spending. Our revenue is only 50% of what we actually spend. All the freebies, all the infrastructure, whatever we do, it's all because of the borrowing of the government. And how does the government borrow? Government borrows by issuing bonds, and that's where the RBI comes in. They print money. And if you look at the money supply, that's where the problem comes. So one of the biggest disadvantage of the currency which we hold is that it's inflationary. It loses value every year just because the printing is on. So if you have 100 rupee in your pocket, it will start losing relevance even if you don't do anything. So that's the reason, that's the current problem in the fiat currency. Is it clear here till now? Yes or no? Now, what happens when money gets printed? The biggest challenge is inflation. Now, this chart shows how your rupee loses relevance over a period of time. If inflation is 2%, this is a chart at 5%, it becomes 40%. You lose 40% of your purchasing power in 10 years. And if the inflation is 10%, your 100 rupee becomes 40 rupees. Now, government reports an inflation of 4, 5, 6%. And you may think that inflation is that number. But let me tell you, that's not the real inflation. For example, India. See, India is majorly a poor country. Most of the people, unfortunately, are poor in India. And the food what they consume are cereals, rice, wheat, other things, where the prices are highly controlled by the government. So when government control calculates inflation, it's on the basis of food basket, where these items which are price controlled gets reported. That's how the calculation of 5-6% comes. But for middle class, upper middle class, or anyone, generally the inflation, according to me, is no less than 10%. The fruit, the vegetables, the education, the healthcare, the house, everything, they become costly by 9-10% every year. So you should assume your value is getting eroded by 10%. And generally, historically, we have seen there is a high correlation between money printing or the money supply and inflation. Higher the money supply, higher is the inflation, or higher is the erosion of the capital. So one of the reasons why wealth management or why investment is important is that you need to make your money grow at least 10% per annum to even protect the purchasing power. If you're not doing that, then there is a significant wealth erosion. So this is the current problem. Now that's where things become interesting. That's where our friend Bitcoin comes. So this shows the US M2 money supply, which is infinite, or anywhere the money supply is infinite, it can keep going. They just need to print money. Bitcoin supply is something where it's limited. It's limited to 21 million, and it doesn't increases after that. Now, a lot of people, may want to understand what is Bitcoin, how does it work, and I'll explain you how does it work. And see, a lot of times you may not have to understand. I don't know how many of you understand how AI works, right? Or how does NVIDIA makes a chip. But what is important, it's relevant. And the formula basically is that the supply of Bitcoin is fixed and it's deflationary, which means when a supply is fixed, the prices don't increase. The purchasing power of it, not the price, the purchasing power of it doesn't gets eroded. The purchasing power, in fact, increases when the supply is limited. And generally the supply of Bitcoin is 21 million fixed, and till now, 19.8 million has come into supply, and the last supply will come at the year 2140. And let me explain you briefly that how does a Bitcoin work, because I'm sure a lot of people don't know how does it work. So you should think it like this, that there's an accounting ledger. खाता जिसे हम कहते हैं हिंदी में, आप जहाँ accounting लिखते हो, your accounting book, there's a debit, there's a credit, right? Now you have it, your personal ledger, government has their personal ledger. In fact, even banks have, everyone has a ledger. जब आप पैसा बैंक से withdraw करते हो, they do a debit from your account. When you deposit, there is a credit. I'll take the question and answers in the end, please. So there's a credit. Now in Bitcoin, what happens is there is a ledger. Similarly, there is a ledger, and it shows that which Bitcoin address holder has how many Bitcoin and what transactions are happening. Now this ledger has been put on the cloud. It's available on the network, and anyone can download this. So it's a distributed network. It's available. In fact, today after this session, just you have to go online, download, and see which Bitcoin addresses has how many Bitcoins and what are the transaction which happens. And whenever any holder transfers the Bitcoin from one account to other Bitcoin, there are people who verify the transactions. And once the transactions get verified, and this verification is done by miners, they get rewarded. And generally, a transaction gets completed every 10 minutes. And those who complete the transaction, they get 3.125 as a Bitcoin as a reward from the system. That's where the new supply keeps coming in. So that's how the Bitcoin works. The advantage is that it cannot be manipulated. The ledger, it's in public domain, and then lakhs of people who have that data, they verify it. So it cannot be manipulated. There cannot be any forged entry because it requires the verification of many people. So it has its own advantage. No one owns it. No government can control it. No individual can control it. No institution can control it. So it's highly distributed, and that's where the advantage comes. And that's why the supply is limited. It cannot be printed. Now, this shows the difference between Bitcoin, gold, and fiat. So one advantage is that Bitcoin, there's a scarcity. There's a limited amount of Bitcoin which can come. And the last will come in the year 2140. And when there's a scarcity, the prices goes up. So it's automatically deflationary. Gold, there's a supply. You can have mining and you can generate gold. The per annum supply growth is 1.5-3%. Now, gold is, a lot of people will tell me that gold is limited. I don't agree with the fact that gold is limited, because when gold prices goes up, mining becomes feasible. You can go further deep down the earth and bring in more gold. So according to me, of course, gold also has infinite supply, but it's not easy. But if gold prices keeps going up, the supply can increase. The fiat, which is a rupee, it's theoretically unlimited. They can print as much as they want. Bitcoin is highly reliable. It's, as I was explaining, it's secured by global digital decentralized network run by individual and institutions. It cannot be hacked. It cannot be done anything. It cannot be controlled. Gold has been there for thousands of years and hopefully will continue. It depends on the soundness of fiscal and monetary policy. Right now, for example, you have US dollar or you have Indian rupee. Now, if any of the government messes up and they start printing more, then the value may get eroded. So we don't know which fiat will stay relevant. Transferability, Bitcoin can be transferred anywhere across the world as much as you want in 10 minutes at fraction of cost. And it happens immediately. Gold, it's not easy. There are large quantities you have to take through ship and all. Fiat, easy to transfer, but requires a lot of intermediaries. You have to go to the bank. There is a spread of 3-4%, and international transfers may take 1 or 2 days. So that's where the advantage comes, transferability. Verifiability, it always ensures that the transaction gets verified, and there cannot be counterfeit. And in the sense, if you're buying Bitcoin from a proper channel, proper network, there cannot be copy of that. But gold and fiat, there's always a scope of risk of counterfeit. So these are the major difference between Bitcoin, gold, and fiat. This is just to give you experience in the sense about knowledge about how the global assets is distributed. Currently, Bitcoin, the market cap is $1.8 trillion. Gold is $16 trillion. Art is 18. You have cars and collectibles at 6. Equities is 115. Real estate is $332 trillion, bonds 300, money 120. So globally, the assets are $900 trillion. It's anyone's guess which asset class will grow, and that's what you need to do. You need to put your money which you think will grow at a much faster pace. So that's where it gets interesting. My assumption is that Bitcoin in coming years will become very big and very important and very relevant. Now let's look at the investment returns. As I told you that there is an inflation of 10%, and anything which is giving us post-tax 10% less, we need to be worried because we have to protect ourselves, our assets from inflation. These are historical return of indexes. I'll show you Bitcoin as well. Like Indian equity, last 20 years has given 14%. Fantastic. This is pre-tax return. Your 15 years, 12%, 10 year, 12%. Last 5 years have been great after COVID. Last 1 year, 6.7. US equity has also done phenomenally well, similar to Indian equity in 20 years, 15 years, 18, and 10 years, it's higher. So yeah, last 1 year, US equity has been fine. Gold has done phenomenally well. And 20 years looks high, but 15 years it's low. The reason the gold numbers are also looking high because the recent rally has been very strong, especially after the Ukraine war. The central banks of China, India, Russia, Turkey, they are buying gold. That's why the gold is going up. Real estate, this is residential index, residential flat, where it gives you inflation kind of return. Land is an interesting asset. I think it gives 13-14% return, but you cannot handle easily. The land is not easy. Your FD debt gives you 7.5, but this is all pre-tax. So yeah, these are the options where you can invest and generate return. An objective is also to increase the return. That's where the Bitcoin return comes. This shows the yearly return of Bitcoin, and this is all in dollar terms, by the way, and that what kind of return has come. Initially, so Bitcoin, it started in 2009, and then the initial returns were pretty high, so you can ignore that. But these are the late returns, like 2024, the return was 121%, 23 156, 2022 it crashed, and so the returns are very high. They have a pattern. It has a pattern that 3 years there's a bull run, 1 year there is a crash, and it's linked to an event called halving. Halving is an event where the miners, the reward which they get, the Bitcoin of 3.125, every 4 years it halves. And so Bitcoin generally crashes 2 years after the halving event. So the last halving happened in 2024, so it may crash by the end of 2025 or 26, it will start crashing. But this is interesting. The returns looks higher. The past return, if we talk about last 10 years return, per annum return is 80% in dollar. Per last 5-year return is 60% per annum. So it becomes very interesting. It gives high return. But what you also need to consider is that 99% of the investors don't make money because they invested wrong. Now, what is important is the consistency of asset. And I love this chart. Now, this shows since 2013, different asset classes, Bitcoin, US equity, real estate, gold, how they have done well. Now, what is important is that Bitcoin has been best performer in the last 9 years out of last 12 years. So fantastic. It's highly consistent. And when it underperforms, it performs very badly. 60%, you see a correction of 60%, 72%, 65%. And people don't make money because they always end up buying Bitcoin when it goes up and they sell when it goes down. They should be doing reverse. They should be buying when it crashes. Like right now, you guys are you guys have come to attend this session. You have come to learn about it because it has gone up, right? It was in January 2023, it was trading at 17,000. And in 2 years, it has become 5 times. So I'm sure if something goes up, the past return has been high, and now it has become very risky, because it has already gone up. Maybe it further goes up to 125, 150,000, but then again, it may crash. So generally, you should be investing when it crashes because then the margin of safety is high. Now, a lot of people say that Bitcoin gives, of course, very high return, but it's risky. It's highly volatile. In a night, you can see 10, 20% correction. And there's a measurement ratio, something called Sharpe ratio. A lot of you must have heard about it. Sharpe ratio is return after adjusting the risk, or risk adjusted return. So from the return, you adjust the volatility and then see. So Bitcoin, even after high volatility, has the highest Sharpe ratio because the kind of return it gets. So if you're able to manage the risk, if you're able to manage the volatility, if you're able to educate yourself, if you're able to understand it, then there's phenomenal wealth to be made. Bitcoin is the seventh largest investment, gold being the highest. There are companies, Nvidia, Apple, Amazon, Alphabet, and this will only become bigger and bigger. So, in India, of course, Bitcoin is not regulated. Government is not very favorable about it, but globally it has become very big. Governments are buying Bitcoin. You'll be surprised to know that a lot of countries already hold Bitcoin. Our neighbor Bhutan has been a good investor in Bitcoin. There's a country called El Salvador where Bitcoin, they're one of the biggest, and you can do trading on that. You can use it as medium of exchange. USA, China, UK, they hold Bitcoin. It's not that they bought it. They got the Bitcoin because when from the theft, when they recovered it, it's with them, and they have not been selling it. But there's a very high possibility that as the uncertainty goes up, and we're already seeing the uncertainty due to Trump, the countries may start buying Bitcoin as well. A very important event which happened in January 2024 is that the US government legalized ETF of Bitcoin. ETF is exchange traded fund, like an index fund. Before that, the ETFs were not legalized. It was not there. iShares, which is a BlackRock, it was the first Bitcoin ETF. Currently, you have $95 billion, or almost 85,000 crores invested in Bitcoin ETF. In fact, Bitcoin ETFs were the fastest growing investment, fastest growing ETF in the last year 2024. And because of ETF, it has become easy for investors to invest. And now you have investors, you have institutions, you have pension funds, endowments, companies allocating the money to the Bitcoin through this. See, what happened is before January 2024, Bitcoin was not kind of legal globally. And because the biggest investments in Bitcoin crypto happens in US, and there was always a risk that US could ban it or countries could ban it. But in January 2024, the Bitcoin ETF came. ETF is like a mutual fund where investors can put the money in a Bitcoin, and the underlying is a Bitcoin. So like you have in India mutual funds through which you invest in equity. Similarly, ETFs are there, mutual funds are there, through which you can invest small money. And they got launched. And in 1 year, the AUM of the Bitcoin ETFs, and it has been launched by Fidelity, iShares, ARK, Grayscale, Invesco, the biggest of the names, Franklin, $95 billion which got invested, and it's phenomenal. It has been the fastest growing, ETFs. There are thousands of ETF globally, and BlackRock, which is the largest ETF provider in the world, now has higher AUM in Bitcoin ETF even than the gold ETF. And because of this ETF, companies, universities, endowments, individuals are allocating the money to the Bitcoin. Even Fidelity, which is one of the biggest financial advisors in US and globally, has started recommending to the investors. So what is happening is because of this ETFs, the Bitcoin has become mainstream and it is becoming bigger and bigger. So this is what, it's a very big development, and I think it makes Bitcoin legally. It's going to stay here now, because so much of money is invested and it's highly regulated in US and other countries. Unfortunately, we are still yet to have a regulator, and it's high time we have a regulation so that investors in India can also participate in these instruments and participate in the wealth creation. So what is happening is that, the Bitcoin journey, the crypto journey, it's very important that educate yourselves, you learn, because a lot of time people think it's gambling, bad experience, lottery, speculation, and it all depends how much knowledge you have. And the best way is you learn, because it's going to stay here. It's going to become big. People are going to make money. And I'm not saying you invest or do anything, but learning about it is something which you need to. Last, the suggested strategy. What is my suggestion? It's not a recommendation. Again, it's a suggestion. I've been investing in crypto, Bitcoin since 2017. So this is based on my experience. So one, you need to know the fact that 99% of investors don't make money in crypto. Like futures and options, 92, 93% don't make money. Still people do it. The fact is, eventually, people may not make money because they do it wrong. So you need to educate yourselves. You need to do it right. You need to follow the asset allocation approach. It's not that you put in a lot of money and then suddenly it crashes and then you lose money and then you panic. It doesn't work like that. Till the time you have an asset allocation framework, you look at it as one of the asset class in your portfolio, allocating some money, it should be fine. So there has to be strategy around that. You can consider investing 1 or 2% of the portfolio. I'll not recommend you do a lot of the money. And because I've seen people who start small and when market goes up, they end up investing a lot and they really burn themselves. So start with 1-2%, see how it goes. Don't over allocate right now. You need to consider the worst case scenario that this money can become zero. So you should have this thought process in mind that whatever you're investing, it may become zero, but there is a possibility that this may create intergenerational wealth after 10-20 years for your children, grandchildren. There's a very, very high possibility. The probability is very high. So your 1 or 2%, even if you park it right now, there's a high possibility that after 20 years, this will automatically become 20% of your portfolio because it grows so much. So it's like a lottery where the probability of winning is very, very high if you do it right. But you should always assume the worst case. Only put that money that even if it becomes zero, it doesn't hurt you. Consider only Bitcoin. See, the crypto world is huge. And it's not just about Bitcoin, it's just one story. There are smart contracts, there's Ethereum, Solana, and there's a lot of decentralized finance which is getting built up. A lot of applications which is getting done. In fact, a lot of you use Digital Yatra, Digi Yatra in India. Let me tell you, all the data of Digi Yatra is in the blockchain. It uses crypto. In fact, the land records in some districts of Maharashtra is getting, is in blockchain. So the applications is getting used. Recently, Geo has done a tie-up with Polygon and they are coming out with Web3 applications whereby they'll be issuing tokens and all. So there's going to be a lot of applications. But what I want to tell you is forget about other crypto coins. They are highly more volatile and you will burn yourself over there. Just focus on one. The Bitcoin is going to stay here and just focus on it. And you should make good money over there. The holding period suggestion is 10 years. Buy and hold is the only thing that works. Don't try to trade. This is from my experience. If you try to trade, you will burn your hands. You can consider monthly SIPs. Keep buying every month because it's very difficult to time it perfectly. So keep buying it. You don't have to use your brains. Do proper due diligence on exchange and hold your Bitcoin carefully. In India, unfortunately, it's not regulated. There is an exchange risk. There are many exchanges in India. We don't know whether the exchange from which you're buying, whether they are holding the underlying crypto or not. A lot of times there are hacks. Recently, there was a hack in Indian exchange as well. People lose money. So you have to be very careful. But as you spend time, you will know how you can protect, by transferring the Bitcoin to your hard wallet. You can buy ETFs, but do your proper due diligence before investing in Bitcoin. Do proper reporting to government and pay proper tax on crypto. Now there's a FIU, Financial Intelligence Unit. Government has made it compulsory for all the exchanges to share crypto data with the government. So all the crypto you're buying from exchange is already with the government. So whenever you're filing income tax report, please report over there because government has the data. Bitcoin is getting taxed at full marginal rate in India. So pay proper tax on crypto. You don't want that, you be on the wrong side of investments. But even if you pay full tax, even if you invest right, you will still make a lot of money. I've written a book on crypto. You can buy it from Amazon. Talks about the history of money. You can order and learn and share my feedback. These are my contact details. You can visit my website. I'm on LinkedIn. You can message me over there and we can stay connected.